Health insurance. When you get sick or injured, medical care can cost more than most people earn in a year. Health insurance is a contract between you and an insurer where you pay a regular amount, called a premium, and in return, the insurer covers a portion of your medical bills. It can include doctor visits, hospital stays, surgeries, prescriptions, and sometimes mental health care. Employers often provide it as part of a job package, but people can also buy it privately or through government programs. Without it, a single serious illness can push a family into financial ruin. Life insurance. It is designed to protect the people who depend on you financially if you were to die. You pay premiums while you are alive, and if you pass away during the coverage period, a lump sum is paid to whoever you have named as a beneficiary. There are two broad types. Term life covers you for a set number of years, and whole life covers you permanently, while also building a small savings component over time. It became widespread in the 19th century as industrialization left many families without any safety net when a breadwinner died suddenly. Auto insurance. Driving a vehicle comes with real risk to yourself, to other drivers, and to property. Auto insurance covers the financial fallout from accidents, theft, or damage. Most countries require drivers to carry at least a basic level of it by law. Liability coverage pays for harm you cause to others, while collision coverage handles damage to your own car, and comprehensive coverage takes care of things like theft, flooding, or a fallen tree. Premiums vary based on your driving record, the type of car you own, and even where you live. Home insurance. Your home is likely the most valuable thing you own, and home insurance protects it against unexpected events like fire, storms, theft, and certain types of water damage. It generally covers the structure of the building itself, the contents inside, and your liability if someone is injured on your property. Mortgage lenders almost always require it before approving a home loan. Policies differ widely in what they exclude, so things like earthquakes and floods often need to be covered separately. Renter's insurance. Many people assume that if they rent, they have nothing to insure. But the building your landlord owns is not the same as the belongings inside it. Renter's insurance covers your personal possessions if they are stolen or damaged, and it also provides liability protection if a guest is injured in your apartment. It is one of the most affordable types of insurance available, yet a large portion of renters never buy it, often simply because they did not know it existed. Disability insurance. Most people insure their car and their home, but forget to insure their ability to earn money. Disability insurance replaces a portion of your income if an illness or injury prevents you from working. Short-term disability kicks in quickly and covers you for a few months, while long-term disability can last for years or even until retirement age. Many employers offer it, but self-employed people need to buy it independently. The risk of becoming disabled at some point during a working career is higher than most people expect. Travel insurance. When you book a trip, especially an international one, a lot can go wrong. Flights get canceled, luggage gets lost, and medical emergencies abroad can cost enormous amounts in countries where your regular health plan offers no coverage. Travel insurance bundles together protection for trip cancellations, medical expenses, emergency evacuations, and lost belongings. Some credit cards include basic versions automatically, but standalone policies offer more thorough protection. It became particularly visible during the early 2020s when global travel disruptions left millions of uninsured travelers with no recourse. Pet insurance. Veterinary medicine has advanced dramatically, which means treatments that were once impossible are now available, but often expensive. Pet insurance helps cover the cost of surgeries, treatments, and emergency care for your animals. Policies typically work differently from human health insurance. You usually pay the vet up front and then submit a claim for reimbursement. Coverage varies significantly between providers, with some excluding hereditary conditions or pre-existing illnesses entirely. It is most common for dogs and cats, but can sometimes extend to other animals. Business insurance. Running a business exposes you to a wide range of financial risks that personal policies do not cover. Business insurance is an umbrella term for several types of coverage that protect a company from lawsuits, property damage, employee injuries, and operational disruptions. General liability covers claims made by customers or third parties. Property insurance protects physical assets like equipment and inventory. Business interruption insurance replaces lost income when something forces a company to shut down temporarily. which proved critical for many businesses during major natural disasters and public health events. Crop insurance. Farmers face a kind of uncertainty that almost no other profession does. A single season of drought, flooding, frost, or disease can wipe out an entire year's income. Crop insurance protects against that possibility, covering losses in yield or revenue when natural events or market conditions fall outside a farmer's control. Many governments subsidize premiums heavily to ensure food producers stay financially stable and continue farming. Without some form of crop insurance or equivalent support, agricultural economies become fragile and unpredictable at a national scale. Marine insurance. It is one of the oldest forms of insurance in the world. Merchants in ancient civilizations developed early versions of it to protect goods being transported across seas, and by the 17th century, Lloyd's of London had formalized it as a commercial product. Marine insurance covers ships, cargo, and related liabilities during transit over water. It applies to everything from massive container ships carrying consumer goods across oceans to private recreational boats. The complexity of international shipping means marine policies can become highly detailed documents outlining exactly what is and is not covered during each leg of a journey. Aviation insurance. Flying involves specialized equipment, skilled operators, and a range of risks that no standard vehicle policy comes close to addressing. Aviation insurance covers aircraft against physical damage and covers liability for injury to passengers, crew, or people on the ground. Commercial airlines carry enormous policies given the scale of potential losses. Private pilots and small aircraft owners also need coverage, though at a different scale. Because aviation incidents, while rare, tend to be catastrophic, underwriting in this field requires deep technical knowledge of aircraft types and operational patterns. Cyber insurance. As businesses and individuals have moved more of their lives and operations online, a new category of risk has emerged. Cyber insurance covers financial losses resulting from data breaches, ransomware attacks, system failures, and related incidents. It can cover the cost of notifying affected customers, recovering data, legal expenses, and even ransom payments in some cases. The market for it grew rapidly through the 2000s and into the 2020s as high-profile attacks on hospitals, corporations, and government agencies demonstrated just how expensive a single breach could become. Long-term care insurance. As people live longer, the likelihood of needing extended assistance with daily activities increases. Long-term care insurance covers the cost of services like nursing home stays, assisted living facilities, or in-home care for people who can no longer manage independently due to age, illness, or disability. Regular health insurance and most government health programs cover short-term medical treatment, but are not designed to fund years of custodial care. The premiums for long-term care policies are typically lower the younger you are when you purchase them, making it a product often discussed in mid-career financial planning. Title insurance. When you buy a piece of real estate, you are trusting that the seller has clean ownership with no hidden claims against the property. Title insurance protects against the possibility that something in the property's ownership history turns out to be wrong, such as undisclosed liens, boundary disputes, errors in public records, or even fraud. It is almost always required by mortgage lenders and is paid as a one-time premium at closing rather than on a recurring basis. Unlike most insurance, it protects against events that happened in the past rather than risks in the future.